Hello students, in this video I am going to discuss inventory accounting.
So the very first question is, what is inventory? Following are examples of inventory. If a business is purchasing goods for resale, that's an example of inventory. So for example, if Tesco's is buying groceries from its suppliers so that Tesco can resell it, that's an example of goods purchased for resale. In this case, it's called trading business. Then other examples of inventory include consumable stores such as oil, raw materials and components, incomplete goods, partly finished goods. They are called work in progress. Work in progress are another example of inventory. And then we have finished goods. Finished goods are also an example of inventory. Okay, this is very important. According to International Accounting Standard 2, inventory must be measured at the lower of cost or NRV. What is included in cost? All expenditure incurred in bringing the product or service to its present location and condition. That will include material cost, import duties, freight, cost of conversion. Cost of conversion includes labor and overhead cost. And net realizable value. Net realizable value is revenue expected to be earned in the future when goods are sold less any selling cost. So inventory must be measured at the lower of cost or NRV. So you can see what is included in the cost of inventory and what will be excluded. Continuing on, we have understanding 1, very important. So here question is asking us, what is the value of closing inventory? There are three type of products, X, Y and Z. For each type of product we are given cost and NRV. So what we are going to do, for each of them I'm going to pick whichever is lower among cost or NRV. So for product X, its cost is lower. For product Y, its NRV is lower. And for product Z, again, its NRV is lower. So these three are representing values of X, Y, and Z. I'm going to multiply them with number of units of each product. And that will give me the value of closing inventory. Let me do that in Excel. I have to make it shorter. Okay, so we can see there are three products X, Y, and Z. So this one is 7, this one is 8, and this one is 15. I'm going to multiply with number of units 100, 200, and 300. So I'm going to take 7 times by 100. Similarly, 8 times by 200, 15 times by 300. And these three numbers will be added up so that we can reach at the closing value of inventory. So this is closing value of inventory. 6,800. This is value of closing inventory. B is the right answer. Okay, let's move on. Okay, in understanding 3, okay, we have to identify out of given four options, which ones are items that will be included in the statement of financial position for inventories. I got A. A is incorrect answer because of carriage outwards. Carriage outwards is a selling expense. Therefore, A is not correct. In B, cost of storage of finished goods. This is a selling and distribution cost. This is not part of inventory cost. B is not an option. C is the right answer because all of these expenses are incurred in order to bring asset into working condition. C is the right answer because all of these items, all of these expenditure are incurred to bring inventory into finished goods. D is again incorrect because of carriage outwards. Carriage outwards is a selling expense. Here, correct answer is C. Moving on, moving on. Okay, so in illustration 1, they are asking us adjustment for inventory. So let me copy this question in Excel and I'm gonna solve it there. Okay, so this is the question we have. So first we have opening inventory. Okay, what is the requirement? Requirement is calculate gross profit. Now, how do we calculate gross profit? For gross profit, we take sales revenue less cost of goods sold. If I do that, I will reach at gross profit. Now, how do I calculate cost of goods sold? Okay, we need to calculate first cost of goods sold. We have opening inventory, add purchases less closing inventory. That will give us cost of goods sold. Okay, on 1st of January, you can see 30 washing machines. 30 machines at a cost of 9,500. And then they purchased 65 machines at a cost of 150,000 pounds. And then closing inventory is 25 machines at 7,500. According to the formula, closing inventory will be deducted. So we will reach at cost of goods sold. If I take the total of this, that will give me cost of goods sold. That's 152,000. Question is, how much is the sales value? Sales value given is, so here you can see sales revenue is given here, 215,000. So Peter has sold 70 machines with a sales value of 215,000. So 215,000 minus 152,000 cost of sales that I have calculated here, that will give me a gross profit of 63,000. Okay, now this is very important. There are only two times during the year when inventory entries are made. For the opening inventory, we pass this double entry. Inventory, which is an asset account, will be credited, and income statement or cost of sales will be debited. When we debit income statement or cost of sales, that means an expense is increasing. Moving on, for the closing inventory, there is only one entry that we make during the year. We debit closing inventory, which is an asset account, and we credit income statement or cost of sales account. Income statement or cost of sales account, whenever credited, it's an expense that is decreasing. If a sole trader takes inventory from their business for their own use, we pass this double entry. Drawings debit, cost of sales credit. Drawings is reduction in equity. Reduction in equity, whenever equity decreases, we debit drawings. So next are methods of calculating cost of inventory. We have three different methods: unit cost, FIFO, and average cost method. There's another method to calculate cost of inventory, which is LIFO, last in first out, but that's not allowed by international accounting standards. So here I'm going to explain FIFO, method of inventory valuation, using an example. So you can see on 1st of April, we have 50 units at cost per unit of 2 and 100 units at cost per unit of 4.5. These units are already in balance, so I'm going to put them in balance. So 50 times by 2 and 100 times by 4.5. So these units, I'm going to calculate their total cost, 50 times by 2. Similarly, I have taken this 100 times by 4.5 gives me 450,000. Okay, next we can see there's a purchase of 100 units. Since this is a purchase, I'm going to put it in purchases column. You can already see I have made three columns. One column is for purchases, one column is for issues, and one column is for store. You can say this is simply purchases, this is the number of units sold, and this is your store. What inventory units you have in inventory? So you can see on 5th of April, 100 units are purchased at 1.8. I'm going to put 1.8. So total value will be 100 times by 1.8. That's 180. These units are purchased. These units will be taken straight away to our inventory. On 10th of April, 80 units are issued to factory. First of all, whenever there's an issue, you will go to store and draw a line like this. I repeat, whenever there is a sale, you will go to store, balance, and you will draw a line. Let's check how many units are sold. So 80 units are sold. It's first in, first out. Therefore, oldest units will be sold first. If it's first in, first out, first I'm going to take these 50 units at value of 2, and then I have to issue total 80 units. 50 units are issued, remaining 30 units will be taken out of this 100. So 30 units at 4.5. So 100 minus 30 will give you 70. At what value? 4.5. And already in stock 100 units at 1.8. And then I'm going to take total. So this is 315 and this one is 180 or 1.8. Let's go to transactions and see what else is there. But before that, I can calculate total cost of my issues. 100 and 135. Next, 15th of April, 50 units issued to factory. Once again, it's an issue. Whenever there is an issue, we are going to draw a line. So I'm drawing a line here. So 50 units issued to factory. Okay, first in, first out. I have 70 units here. Since it's first in, first out, therefore 50 units will be taken out of 70. So 50 units at what value? 4.5. What is the value of units left? Out of 70, I sold 50. So 20 units are left at 4.5 and remaining units are 100 at 1.8. So 20 times by 4.5 and 1.8. We can also calculate total value of these issues. That's 225. Okay, that's fine. And on 20th of April, 20 units are purchased at the value of 1.5. So I will go to purchases column. I will take 20 units there. 1.5. I will calculate its total value. 30. I think it's better if I copy here. So this one is 20, 1.5 and 30. Next, 70 units issued to factory. So since it's an issue, I'm going to draw a line. 70 units are to be issued. First of all, these 20 gone and then remaining 50 I will take out of this 100. So 20 units at 4.5 and 50 units at 1.8. In total, I was supposed to be selling 70 units. So out of 100, I'm going to deduct 50. 1.8 is the unit cost. 50 times by 1.8. Next, I got these 20 units at 1.5. So that's 30. Let me take total of this 90 and 90. Okay, final transaction 50 units purchased at the value of 1.7. 50 units purchased at 1.7. So 50 units 1.7. I'm going to take total value 85. So I'm going to take here 50 1.7 85. Okay, that's it. This question is complete. But before finishing, I have to calculate closing value of inventory. value of closing inventory. So that will be, I'm going to take total value of closing inventory is 205, and the cost of sales, cost of issues, that will be this one. That's cost of issues or cost of sales. So this is how we calculate value of closing inventory under FIFO. This is FIFO method of inventory valuation. So I'm going to explain how to calculate inventory value using weighted average cost method formula. There are two type of weighted average cost method formulas. One formula is this, other formula is moving average method. But first I'm going to apply simple weighted average cost method formula. So you can see weighted average cost is equal to cost of goods available for sale divided by total number of units in inventory. So for example, I have this question. In this question, I'm going to apply weighted average cost formula. So you can see here I have opening inventory first. In opening inventory, units cost per unit and total cost. Okay, so you can see we have opening inventory 50 units at the value of 2 and 100 units at value of 4.5, and then I have purchases. So I will take all of these purchases, 100 at 1.8, and then 80 units. Sorry, I'm going to take purchases only. This is a purchase, this is a purchase, and this is a purchase. So I will record all purchases, 20 units at 1.5, and then 50 units at 1.7. So 50 times by 2. I'm going to take total cost for all purchases. Now I'm going to take total cost for all of them, and then I will take total number of units. So now I can apply this formula. Formula says cost of goods available for sale divided by total number of units. So cost of goods available for sale is 845, and then divide by total number of units in inventory, 320 units. So if I take sorry, if I take cost per unit, that will be 2.6403. This is weighted average cost for inventory. I'm going to copy this number. Okay, so this is my unit cost, and I'm going to use it for closing inventory valuation, closing inventory, and cost of sales, both. So unit cost remains the same. So question is, how many units are sold? Let's check here. 80 units, 50 units, and 70 units. So 80, 50, and 70. So total number of units that are sold are 200. Okay, unit cost is this, 200 units were sold. So total cost of sales will be the product of these two, 2.64063 times by 200. I got this. This is the value of cost of sales. Next question is, how many units in closing inventory? So these are total units. Units sold are 200 units. So closing inventory 120. So 120 units are in closing inventory. So 120 times by 2.64. That gives us total closing inventory value 316.875. This is how we use weighted average cost of weighted average cost method for inventory valuation. This is simple weighted average cost method. Now I'm going to discuss moving average method, which is slightly more complicated. Now I'm going to solve this example using moving average method. So first of all, I will take my opening inventory. I will take these units straight to my store to my balance. 50 units at, so you can see 50 units at $2 each, 100 units at $4.5. So 50 units at 2. Under moving average method, after every transaction, I must draw a line. So what you are going to do, you are going to take this 100 plus 450. And then you are going to take this 50 plus 100. And then you are going to divide this 550 by 150. So you can calculate moving average. This step we must do after every transaction. So these are opening number of units, 150 in total at the total value of 550. Let's take next transaction. Next transaction, 100 units are purchased. 100 units purchased at 1.8. So I'm gonna add 150 plus 100. And then I'm going to add 550 plus, oh, I don't have total value here. I'm going to calculate that. So that will be this times by 100. So 730 is the total value of my 250 units. I'm going to calculate cost per unit. I will take this 730 divide by 250. I got 292. Okay, that's fine. And then next, April 10th, 80 units are issued. As I said, after every transaction, you will draw a line. So 80 units are issued. At what value? At the latest cost per unit. So I'm going to take 80 times by 292. I got sold units 233.6. That's the value of units sold. Out of 250, 80 units are gone. Per unit value is 2.92 and total cost is 170 times by 292. Once again, line. Okay, April 10th is done. Next, April 15th, 50 units issued to factory. So 50 units at what cost per unit? 2.92. And total value is 146. Out of 170, 50 units are gone. So remaining units are 2.92. And then I'm going to calculate total cost of these 120 units. This one is done. Next, April 20th, 20 units purchased at 1.5. 20 times by 1.5 is 30. So I'm going to take this 350 plus 30. 120 plus 20. 140. So I'm going to take 380.4 divided by 140. I got 2.717. Once again, I will draw a line. April 25th, 70 units are issued to factory. 70 units are issued out of this 140 units. Cost per unit is this. Total cost of units issued is this. So out of 140 units, 70 units are issued. Remaining 70 are left in inventory. And the total cost will be 70 times by this. Okay, that's fine. Next, April 30th. April 30th, 50 units are issued at 1.7 and total value is this. Once again, I will draw a line. I'm going to take 70 plus 50, 120, and then 190.2 plus 85. 275.2 divided by 120. So the value of closing inventory will be 275. And cost of issues, let's check. Cost of issues or cost of sales is correct, 569.8. So this is how we calculate value of closing inventory and cost of sales using moving average method. If you have any questions, you can ask me in the comment section. And if you want me to prepare any new videos on any specific accounting topics, then please let me know. I'll make videos on them. Thanks for watching.